Hey everybody, Dave here, Hidden Freedom Investing. In today's video, we're gonna go over my dividend portfolio. We're just gonna look at a mid-month update here. The changes that I made this week kind of, I would say demand a mid-month update. So instead of waiting until March to do this update, I just wanted to get this video out to make it known what I'm doing here and why I'm doing it. So let's go ahead and get started. So if you've been following me for a while, you do know that I do have a hybrid portfolio. So that has one ETF in there and some individual positions, all right? And I originally started this portfolio out with just individual positions and then later added VYM in there. So I kind of had a hybrid solution. And today we're gonna go over another change that I made to the portfolio this week. And kind of the reasons why I did it, this is kind of an evolving strategy going forward. I kind of notice things that the way they act and all that. So I'm kind of excited with this change actually, because I think it's going to be great going forward and long term. It kind of gives me a little bit more flexibility. So I don't know what to call this. It's still a hybrid. Maybe we'll call it a tricycle or maybe menage a trois. All right, we are looking at my dividend portfolio overview page. I've done plenty of videos on this. If you're new to my channel, you can look at the last video, the dividend portfolio update I do. I do it once a month. You can have that video up here if you want. And I kind of go in more detail about the dividends received and the buys and sells and all that stuff. Obviously I'm gonna do one of those in March, but for this particular one, we're just gonna kind of go through this stuff and try to keep the video a little bit shorter than usual. This is the dividend portfolio, and I don't know if anybody's recognized the change right off the bat, but if you didn't, that's fine, we'll get to it. There is $421,000 invested in this portfolio at this time, and obviously for anybody that's new to my channel, or not obviously I guess, anybody that's new to my channel, there's $1 million goal for this portfolio. And I'm about 42% to that goal. I do have real estate notes and all that stuff where that cash is gonna be coming out of and coming in the portfolio to fill out the rest of the portfolio. So right now there is about $51,000 in gains in this portfolio, about 14% total. And the average weighted dividend yield is 3.74%. Average yield on cost is 4.27%. Average weighted 5-year dividend CAGR is 7.15. That is actually to be determined, and we'll find out here in a second why. Average weighted beta 0.85 still. Average beta about 0.76. Number of positions still 30 positions, and the number of shares 5,797. And this also generates about $15,766 in annual income for a monthly dividend income of $1,314. And the daily dividend income is $43 for an hourly dividend income of $1.80. So for any of you that hasn't noticed the change yet, let's go ahead and take a look at the change. All right, we are looking at the dividend portfolio positions here, and we'll scroll to the top here, and obviously it's pretty much all the same positions that are in there, minus one position and in addition of one position. So what did I add? I added NUSI in there, okay? And so that's another ETF there. NUSI got added. It is now the second largest position in the dividend portfolio with $51,000 total, almost $52,000 invested total in NUSI. All right, so I still have 30 positions in here, so that means I had to cut one position, and the position that I cut was Cisco Systems. Okay, so not the food company, the technology company, CSCO. That got cut out of the portfolio. So how did I fund NUSI with $51,000? Because I didn't actually add any new capital to the portfolio. We'll actually take that back, added a little bit of cash to it, about a couple $1,000s. But so that means that I had to sell some positions or take some profits and render some profits to fill in that $51,000. And what I ended up doing is I ended up filling in, I sell quite a few stocks actually, but I didn't fully sell out of those stocks. And here is a snapshot of a lot of the different positions that I sold. Actually, there's a couple different pages, but I'm just going to show the one page here just because. So I just rendered profits in Starbucks, you know, Home Depot, a little bit of Con Ed there, a little bit of JP Morgan, a little bit of Southern, a little bit of IBM, a little bit more of Home Depot there, a little bit of Duke, a little bit of Caterpillar. Those are all dividends received there. Let's see, I sold a little bit of VYM. We'll talk about that here in a second. A little bit of Duke, a little bit of Exxon Mobil, you know, some more Con Ed there. There's a little sold a little bit of Intel. And I sold, you know, sometimes I sold it a couple times that day, or maybe sold it the next day or something like that. There's the dividends reinvested, but here's some more sells right here: Caterpillar, Home Depot, Starbucks, and then I bought some more NUSI. So going back to the portfolio here, so I did render some profits in some of these positions, not a lot. Obviously, I sold out of Cisco completely. I did sell a little of Intel. Sold a little bit of Home Depot, a little bit of IBM, a little bit of Starbucks, a little bit of Chevron. Excuse me, I didn't sell any Chevron. A little bit of ADV, a little bit of Exxon Mobil, a little bit of, you know, Con Ed. Rendered some profits in Caterpillar. I'm up 74% in that stock. Sold a little bit of 3M. Sold a little bit of JP Morgan. Did not sell any Apple, Johnson & Johnson, or Microsoft. Okay, did not sell any T as well. So at this point, really what I want to do is get these individual positions down to about $250,000, which right now it's very close to it. It's only off by a couple $1,000s. And so most likely I'm going to keep those individual positions pretty close to that $250,000 mark. And the plan is to build out NUSI, and the plan is to build out VYM. So right now there's $114,000 in VYM. So I did cut 300 shares of VYM, okay? And, you know, I had, 12, you know, covered call contracts on Vanguard. It expires tomorrow, or Friday, February 19th. I went ahead and bought those back today, took a loss on them, and I'm gonna do a future video on that as well. There's slight, you know, direction change, or maybe a little bit of flaw to that strategy. So I got to rethink that a little bit. So I did sell 300 shares of VYM today. That all went right back into NUSI, and I've pretty much bought NUSI 3 days this week. And right now it's up to $51,000, almost $52,000, about 12% of the portfolio. And you know, that generates about $3,900 in annual dividends. That does pay monthly, by the way. This video is not to, you know, kind of go into detail on NUSI at all. So if you want to see an in-depth review of NUSI, go check out my buddy GW Life TV. Okay, I'll put a link to his channel up here. And he's done quite a few videos on NUSI, but he did one recently as well. Go ahead and check that recent video out. Let him know that I sent you over there to check out NUSI. If you want to see how this dividend menage a trois performs, go ahead and like and subscribe and hit that bell notification. So why did I get rid of some of my individual stocks? You know, I got rid of one position and kind of cut a little bit of profit out of there. Not a lot of profit, just, you know, a couple $1,000s in profit I took, and just kind of drawed the portfolio down a little bit, the individual positions down a little bit for NUSI. So the thought process is that NUSI is a NASDAQ 100 following stock. It's kind of based off the NASDAQ 100. And if we look at the holdings in NUSI here, we can see the top 10 holdings are kind of thereabouts, right? Microsoft is 9%, almost 10%. We got Amazon in there at 8%. We got Tesla in there at 4%, almost 5%. We got Facebook, we got Alphabet, we got Nvidia, we got PayPal, we got Apple, which I have Apple and Microsoft in my own portfolio. But I like to keep those at 100 shares. We can sell covered calls against them. Intel is in there. Part of the reason why I cut a little bit of Intel as well. We got Netflix in there, we got Adobe, we got Cisco. That's one of the reasons why I decided to cut Cisco out of the portfolio as well. You know, not to mention that, you know, that Intel and Cisco, those are in VYM as well. So I'm kind of triple dipping there, right? That's where you get the tricycle from. And, you know, I just kind of decided to cut out Cisco. It's already in VYM. There's no reason why it needs to be in my portfolio individually. Intel, I think there's a little bit more that I can kind of render out of that. So I'm keeping it in the portfolio for now. But right now, that's triple dipping in as well. If we scroll down here, you know, Pepsi's in there, Broadcom, Qualcomm, Texas Instruments, we got Costco, T-Mobile, Amgen, Charter Communications, Starbucks, another one that I own, okay? That is not in VYM, but it's in my portfolio, so I'm double dipping in that one, okay? You can call that DP if you want. Let's see, Advanced Micro Systems, or Advanced Micro Devices, AMD. We got Applied Materials, we got Micron, we got JD, we got Intuit there. So there's some quality stocks in here. Look at all these quality stocks in here that I was not getting, you know, exposure to before, right? I did not have any growth in my portfolio. I did not have any QQQs or anything like that. People have been busting my darn balls over it nonstop. So I figured adding some NUSI in there was, you know, kind of fills a little bit of the growth aspect, right? So, you know, scrolling down here, you can kind of just look at the rest of these positions in here. So they're real quality positions that are in here. It pays monthly. It pays 7.5% dividend yield, and it pays monthly. It's actively managed as well, okay? It does have a somewhat high expense ratio, but I'm okay with that, okay? I still get, you know, a 7.5% yield there. And I'm getting, you know, kind of, you know, access to some of these stocks here I would not normally get access to unless I bought like a QQQ or an ARC or something like that. But at this point, you know, this is a covered call ETF, okay? So it does cover calls, but they do a little bit different strategy. They actually buy a protective put on it as well. So what does that kind of mean? It's not going to perform as well as QYLD as far as, you know, their yield or something like that. But it's still gonna, you know, participate on the upside, just not as much as a NASDAQ or a QQQ based investment. But at the same time, it's also not gonna go down as much as a QQQ if we have a significant drawdown, okay? Maybe the market goes down 10%, well, NUSI will likely go down that same 10%, but it will be pretty much capped as those protective puts print. And hopefully what it will do is, you know, the QQQs go down 30%, NUSI only goes down 10%, or maybe a little bit more than that, but it won't go down 30% most likely if it's done correctly. And then that gives me more options. I can take cash out of NUSI if I want, and I can stick it back in VYM, or I can stick it back in individual positions, or I can even build out a QQQ or a TQQQ, which I have in my back pocket. So it kind of gives me the ultimate strategy here where I can kind of juggle things around and balance, if you will, you know, as the market delivers what it delivers. Just this week, VYM was down, you know, it was kind of flat or down just a little bit, but NUSI was down 1%. Or even more than that. It was about 1.5% one day. I took some cash out of VYM and shoved it in NUSI. All right, so the strategy there works pretty good because obviously the S&P 500 and VYM are not going to follow exactly what the NASDAQ does at all times. A lot of times the NASDAQ kind of has bigger sell-offs and tech wreck and all that stuff. So this is the chart right here on NUSI. It's kind of a funky looking chart, but it is what it is. It is a somewhat new ETF as well. It's from Nationwide. But right now we're kind of topped out here, you know, pretty much right around this multiple top here, but I'm okay with that. Even if it drops down more, I'll put more money into NUSI and I'll play it that way. But you know, while I'm waiting, it doesn't matter because I'm getting paid that 7.5% annual yield, but I'm getting paid monthly on that, so it can compound real quickly. So just looking back at my dividend portfolio here, if we scroll over to the right here, I kind of had to fill in some blanks here. I don't know if there's dividend growth on that, so I put 5% in there. That actually may be 0%. I don't know for a fact on that, whether or not, I guess we'll have to kind of see going forward. So that's kind of an unknown. It does pay about 7.5% right now. My yield on cost is about 7.5. Pretty happy to have this in the portfolio, and I've already obviously added it to the dividend receive section over here, and I put it right next to O, which is the monthly payer as well. So hopefully we'll start getting payments monthly on NUSI. And coming back here, looking at the overview, I did take Cisco out of there, and there's NUSI right there at the top, and we kind of replace that Cisco spot. In the future, I may, cut some more positions out of here. I may cut Intel out of here at some point. I am still bullish Intel. Did many videos on Intel, and obviously I made made some good money on Intel, but right now I still think that Pat Gelsinger has some more to do, transformation to do with Intel, so it's going to stay in the portfolio for now, but I am triple dipping on Intel, so I may get rid of that at some point. I don't know if I'm going to invest anything else into Microsoft or Apple or anything like that. They're already at 100 shares. I could see myself adding some Johnson & Johnson maybe. But right now I want to keep that portfolio, the individual positions, about $250,000. The ultimate goal is to build VYM out to about $400,000, and NUSI I'm going to try to keep to about $350,000 to about $400,000 as well. And that gives me a lot of flexibility there to move stuff out of NUSI back to VYM, or move stuff out of VYM to NUSI, or even to individual positions. And maybe in the future I do have plans to add QQQ or QQQM to this portfolio sometime down the road when it gets too big to fail. The portfolio gets too big to fail. So that is the update, the mid-month update. Let me know if you like this strategy and your thoughts on it. I'm pretty excited about this going forward. I like the dividend income as well coming from NUSI. I like the ultimate strategy here where I can kind of just move things around as I need. So I would love to hear your thoughts on this strategy and what you think of it. So if you have any comments, questions, or concerns, go ahead and leave me a comment below. Hit me up on Facegram, Twitter, or you can shoot me an email if you want. Until next time, go ahead and like and subscribe, and we'll see you next video. Thanks for watching.